All right. Let's kick off the trading show. What's today's date? September 15th, I guess is the right date. 2020. I'm going to figure out a smoother transition to this. By golly, if it kills me. I'm privileged to have the one, the only Scott Landers here. Scott's in the house, and Chris Burgess is not in the house. Chris is traveling this weekend, so we're wishing him safe travels as he gets to spend a little bit of time with family. Scott, so good to have you here today, man.
Thank you, sir. It's good to be here. I like the no shave November. Oh wait, it's not November. It's coming back. Sorties will be happy.
Yeah, Sorties will be so happy. There's a little bit of a story behind the beard. First of all, the date that it leaves is immutable. March 3rd, my birthday, the beard leaves. Sometimes there's a transition to a mustache, which drives Jen crazy, not in the way that you're thinking. So it typically lasts somewhere between minutes and hours, and then it's gone, and it's clean shaven for the summer, and then it comes back in the fall. So it's not no shave November though. That's too long to wait for the beard to come back.
I'm just curious. I think when you violate certain, agreements with her, she should be the one that shaves it off.
Yeah.
And just hope it's not a straight edge near that jugular right there. Dude.
Oh no, Jen's too kind-hearted for that. She doesn't have a mean-spirited bone in her body. Oh my, hey man, we have so much to talk about this week. This will be an interesting show because you and I did not really, put our heads together at all. So I'm going to just talk about how I was right, and then you can justify why maybe I was right afterward. After I wrap up mine. Let me get my tablet out here. This show is always interesting for me because I don't know how many of you guys know this in YouTube land, but I'm actually teaching a high school course right now with a bunch of kiddos. They're not really kiddos. They're some of them are graduating this year. A lot of them are graduating this year, but it's been a super fun privilege. But I'm always racing to get back to my office because I wrap up with them with just barely enough time to get back here and kick things off. So my desk is my tablets and all the things that are Bluetooth turn off on me, which is a challenge. So I want to talk stock marketing things here a couple minutes in. I'm glad you guys are all here. By the way, I always forget to say this, so I'm going to say it now. If you're getting benefit from these sessions that Scott and I are doing, and Chris when he's here, it would help us so much if you hit the subscribe button and like this video. It's the economy we live in. And here's the reality. It costs you nothing to do that, but it means the world to us, and it helps get this information out to people who really need it. So hit subscribe, hit the like button, and heck, comment on the video. Help us get this content out to the rest of the world. So taking a look at the S&P 500, in fact, I'll come over to SPY because SPY is interesting how this laid out. We basically top tick this Fibonacci zone here. And you guys have seen, in fact, whether you're here live in Zoom or on YouTube, go back and look at the trading shows the previous 2 Thursdays, maybe even as far back as 3 Thursdays. These boxes have not moved one iota. That's a way that you can tell educators versus scammers out there. The educators like Scott and I, we leave our analysis up, and you can go back and fact check us, which I encourage each and every one of you to do. You need to get rid of these Zoom tools. They're driving me nuts. As soon as Scott takes over the video, I'm going to be able to make some changes here. Well, they're stuck. YouTube land can see them for now, which is fine. So let's talk about what these boxes are, and then I'll hand it over to you, Scott. I need to make some adjustments in my monitors.
Okay.
So there's a couple perspectives that we need to keep in mind here that are battling. A few, actually, I'll say. So without argument, the market has been in and has not yet broken this downtrend that began at the beginning of 2022. Nobody's disputing that. You got the moving average cross. This is the 100 over the 200 several months ago, and the angle is down and to the right. That's the definition of a downtrend. We've also been making lower highs and lower lows the whole way down. All of the hallmarks of a downtrend. So that's kind of the big ring around where I'm going to get to with our bullseye here. Now, with that said, we can go a little bit more macro or micro, I guess, zoom in a little bit and say, all right, well, that's true. But if all we could see on the chart is this, it looks like we kind of came up and we've pulled back and we're trying to figure out what we want to do here. And in fact, we can measure this range. And if you do that and plot your Fibonacci analysis on there, you'll find this green box. Again, I think I did this in the trading show. Go back 1 or 2 weeks and you can see how I did the analysis to get this. And this turned out to be spot on. And we were talking about bullish trades here, and I'm not predominantly a counter trend trader. So when we're going bearish, I want to trade with the momentum of the trend. But this was so egregiously oversold at this point. In fact, if we drop the MACD on here, MACD being a reference, wasn't MACD, it was stochastic. Stochastic was so oversold. If we just put the little cursor over this and look back, look left, you could see only one time in recent history has it been that low, back here. And look at what happened. Stock market rebounded, it came on up. You can zoom back all the way to 2020 and you won't find another time that stochastic was that oversold. And just this one time in 2020 where it took an entire freaking pandemic to get the stochastic that oversold. And of course we bounced and got the V bottom and went to the bullish trend. So I wasn't necessarily advocating that we're bullish trend. I'm just saying this little bullish move up and pullback was so aggressive that it really required a bit of a pause in the stock market. So I took some long trades here and I exited on this candle. And then I woke up to my chagrin and we gapped up higher the next day. So this was actually last week's trading show. And I said I exited the trade, which I did right there. Now, this red box is looking at it from a different perspective. To wrap up the green box, as long as we trade to or within, but not below this green box, then we could end up looking like that in terms of price action. And that'll make a lot of sense in a month when we look back and we're like, oh yeah, because the market kind of looks like that. And so this was that. It would make sense. The red box is looking at this move right here. And I will draw this fib on so you guys can see how that works. And we drew this red box and we said, as long as we trade to or within, but not above the red box, then also we could look like that, and fast forward in a month, we're like, oh yeah, it makes sense because when we're in a downtrend, the market tends to look like that. It looks like that because this is all centered around the golden ratio, which is the kingpin, if you will, in Fibonacci analysis. And on the SPY, not so much on SPX, but on the SPY, the way these candlesticks laid out, that box really top ticked right where that move was. And of course, we got the inflation numbers on, let's see, Thursday, all the days we're going to go, Tuesday morning. Disappointing inflation numbers and CPI numbers came out, and the market said, nee, we're going down. And now we are sitting back here at support again. So where are we going? I don't know. Bob's your uncle. But what I can tell you is if we break this low here, there's not a lot stopping us until we get back to these recent lows back in July. And if you start seeing this low back in June busted, then we could be in for a more prolonged bearish move. So I'm currently in 3 bearish trades. These are posted in Discord. For those of you that are TSU members and have access to our Discord, I posted them on this morning right here, about 5 minutes before the market opened. I've got 3 trades that are opened. All 3 of those are doing very nicely, and I'm going to stick in them. I may exit going into Friday. We'll see. But I really, if this green box breaks, then I'll probably keep some of those bearish trades, at least a portion of them open. But I'm up about 6R, which is extraordinary. But just this huge drop here, I'm up about 6R on those trades already. So time to put a little green in our jeans and enjoy going into the weekend. So Scott, that's my perspective, which is the correct perspective. But what say thee about your perspective on Scott is so freakishly good at these ranges and his calendar ranges and all the fancy things that he does, which I'm not cool enough to do. And so just sometimes when you get it this right, you have to do a victory lap. So there's my victory lap.
Well said, sir. Well said. All right, let me share screen and we'll kick this into place.
I'm about to try something on my end, which could destroy everything here.
Oh, cool.
I need my second monitor. So just, in case the internet blows up, let's see what happens.
All right. So
nothing actually blew up.
A few things I want to highlight for y'all. So a couple weeks ago, we're looking at this spot here, and this is the reason I harp so hard about when you're looking at slope. A lot of people are trying to come long right here, and this low is getting swiped. Okay, a lot of people trying to get long. No problem with that. More of the awareness is if you look at your wave count at this point, you're popping off of what has become a 1, a 2, and you're coming into this third wave right here. The reason raise up, you recalculate, you're going 1, 2, and there's your third. Not stressing over that. But I remind everybody is when you start looking at things trying to stop and reverse, if you are trying to go against extreme slope, and you are right here, it's fine that you're coming in. Had a lot of people trying to hammer right through here. Okay. Nothing wrong with coming in that dagger and coming out. Just realize when you have a dagger formation, you typically are going to pop out and then pull back. Okay. So don't be surprised for you guys if you're dealing with different levels. You got clearly defined support here. You had to retest that level there. Nothing wrong with it. But I've seen where some traders say, man, I can't believe I had my stop set right below here and I got long. And I'm like, did you take any profit off? Did you get an R out of it? Well, I got a little bit, but then it stopped me out and then it took off again. Just realize support is not an absolute penny. It is a zone. It is a range. It is a boundary a lot of times. And so I've seen people get hurt on this who should have held long, I guess, is what I'm trying to get across everybody. But I want you to start to understand market structure, and that may help some of you in getting prematurely stopped out. Or the idea of this is give yourself a little more room than just a couple pennies below a significant low, especially in a longer term chart. Okay, there's no point in getting stopped out needlessly because you're just being, and this is what I see a lot of with traders, super tight stops, like way too tight, especially on some bit longer term. So you saw Josh nailed this one coming up and out of it. So I'm bringing it up again so you guys realize it wasn't hard to figure out. This is support. There's a retest. Great spot to enter, depending on who you are and what you're expecting from it. It's played out nicely. Next, counter ranges, which we've done how many webinars on this for free for you guys. You notice where his recent support come into. So I've taken the entire range from high to low year to date. Okay, I pulled the fibs off of this. The trader traction groups have seen this. There's the counter ranges. We touched on this, I guess, a couple weeks ago. You're at support on a counter range. You get a little fib retrace, little fib retrace. Again, you failed on the Qs. The Qs have still been your weakest of the group. They've also chewed into the counter ranges the most. And then the diamonds here lately have just started to lose a lot of momentum. But those counter ranges, guys, give you place of support. What did the market flushes out? This was asked me the other day. The middle of the counter range, the middle of the counter range, again, the middle of the range. I pay attention. If it really gets hammered down bizarre enough and tries to trade back over itself, which is not a good idea, if it does, pay attention. That should create more opportunities for you guys coming up. And I got to get to this so that everybody sees this. So not that chart. We're done with that one. So somewhere, I don't know, Josh, probably in the past 6 months, we've touched on this. And I've stripped this one down quite a bit to highlight this. And you can see the channels, guys, and I'm going to take the channels out of the way. I just want to leave that there for 1 minute. And I want to get something I think is more important, which is really your trend lines. Now, why is this? We went through this example because I had Josh mark his charts up with this. So this is the Federal Reserve day. This is the afternoon. You can see the price reaction. This is the Jackson Hole speech. You'll notice when you left the Jackson Hole speech, where do they find support? The Federal Reserve Day. Why do I hammer this to everybody and anybody, whether it's a hedge fund I work with, whether it's trader traction groups or whatever it's going to be? Because they are the world's largest hedge fund. And everybody wants to know what the pros are doing. If you would just watch what the Federal Reserve is doing, you will see the largest hedge fund that's ever existed in all of humanity. They move one little zero or decimal place, and all of a sudden there's this much more money available. The other piece of this that I don't have marked, I've done it in the past, but I want to start with the baseline. The other piece of this is your Federal Reserve week. Okay, so indulge me here 1 second on this. This is really powerful. People start to use it, and we've demonstrated this for you guys in the past, and I want to reiterate again. So that's the whole week being encapsulated. If you'll notice, where did you retest off of? Where did you find support? Where did you fail? Where did you blow through? Where did you come back, find support? Where did you find support? Where did you find support? Where are you struggling? Notice the gap right here. The other day when it accelerated, where's the gap? The charts don't lie. Everybody can go mark this up. You can all fact check me all you want, but we've documented this out. We've done this in the past. If you want to know what the real money's following, I'm literally giving it to you right now. This is not hard to understand. It is levels. It is a zone, but algorithms are tied to this. You can see it on your charts in front of you. I highly suggest you, next Wednesday is another Federal Reserve announcement. I would take and mark that day the same way. One note with this. So over here, we have the gap down, right? We had a bad CPI number, an inflationary number. So you're not taking advantage of this gap unless you're trading futures, right? This event for Jackson Hole was around, what, 9:30 in the morning, I think, Central Time, whatever it was, 10:30 Eastern. This is in the afternoon at 1 o'clock Central Time, roughly. So you're able to see that activity and react to it in real time or afterwards. Clear the gap, you're missing it. But if you notice, that's the Federal Reserve Day back over here. You'll notice if I were to bring this the rest of the way over here, kind of hard to mistake what you're seeing. And then they bring this over the rest of the way to the bottom of that range, which is where this all kind of started out from. And I'll let the rest of it speak for itself. The same thing's true when we look at counter ranges. I'm trying to show you where a lot of your institutions are hiding out or how they're interpreting things. And so this right here is powerful for a lot of people. And I'm using the S&P. So let's take the same ideology and now take whatever stock you're using, Tesla, Apple, Amazon, oil holders, I don't care, First Solar, doesn't matter. You can still mark the same levels at the same time frames. Then you can start to recognize relative strength, relative weakness to the zones. But this will give you places, if you're trying to target to, will help you. Probably the only thing disappointing about this is not getting up to here. That's probably the only thing disappointing about this, in my opinion. But again, with the CPI being so much hotter than it should have been, but you can see we're coming into. Last but not least, and I'll get back to Josh. Tomorrow's a quad witch, end of Q3. There's a lot of businesses who have their year has closed out, coming into this time of the year. So as I'm telling you this, realize as we go on the quad witch, we have Q4 coming up. We have an election which Wall Street will pay attention to because they want to know if we're going to get gridlock or no gridlock. We get gridlock, Wall Street tends to celebrate that. And whoever the incumbent is usually wants the market to look better going into the November election because it's beneficial for them, regardless of who it is. These are not political opinions. These are the way Wall Street has functioned for decades. So these are things to put in the back of your mind while you're currently trading this environment. This is something we look at quite frequently with the Traction Group, and for good reason. I think that the visual helps you. Me personally, if I'm breaking this down, I would want to know the week, the day. If you happen to have an hourly event like Jackson Hole, I would bring that information across, but I'm going to put most of my interest on this right here. And then you can mark it down to what hour it was, the last couple hours of the day if you were breaking this down. last but not least, if you get a event like you had with the CPI data, there's no reason you cannot come in and mark pretty much from what this zone was to whatever this close was of this day. I'm maybe looking at that correctly, and mark that information out. Now, why would you do that? Because you realize if you recover that box and you go above the box, it's going to have more of a, and I don't like this term, a bullish, expecting higher prices behavior versus below it, you're thinking lower prices. And right now you can see where you've tested and retested this Federal Reserve situation here. That's the daily, that's your weekly. It's giving you very well-defined support resistance. And if you're a day trader in here, you could trade against these levels. If you're a swing trader, you factor this in. Last thing, tomorrow's a quad witch. Volatility has shown up this week. You should expect that going into it. And then you tack on September being a very poor performance month, and the volatility just shakes up a little bit. And that's kind of that. Does that help?
It's really great. And I wanted to remember it as you were talking. I had a few more things that I wanted to color in the lines a little bit as well. As I'm getting control of my screen, I want to thank Flip on YouTube Live. Thanks, Flip, for liking and subscribing to the video. If we're a few minutes in here, I know we've got a lot more that have joined. If you don't mind taking a chance to just subscribe and like, it really helps us out. Y'all can see my chart screen, right? I'm plugged in the monitor, and I think the whole universe was about to collapse. So the last chart I showed you guys was SPY, and I just want to connect these dots here. That's, of course, the ETF that trades the S&P 500. If we look at SPX, this is just a little bit cleaner. I talked about this in my weekly power trader that I did over the weekend. And in essence, what we were looking at the time was a range-bound market where you see us making lower highs, but at the same time, we kind of saw these higher lows that started coming in here as well, which is another reason why I'm keeping such close eye on these lows. But check this out, and I'm a little bit more bullish, bearish than Scott is. I feel like at the end of the day, I have to pick a direction to place my trade, so I've got to be up or down. But y'all, there's some constellations aligning here. What's that? It's a bearish head and shoulders pattern. Now, we could have a grand old debate about whether this is a legitimate or illegitimate head and shoulders pattern. So, I mean, type in the comments, because any comments are good comments. So you can hate on me all you want. I understand that we're in a dominant bearish trend. YouTube would be like, wow, everybody loves this video. They're commenting on it so much. We're in a dominant bearish trend. Head and shoulders patterns occur at the end of an uptrend. Like this was a textbook head and shoulders pattern up here. So I get that. But at the end of the day, we also had an updraft. I don't want to misuse your term, Scott.
You're okay.
So
no, you're fine.
Thanks, Buzz. Buzz is commenting on YouTube. But we've got a upward momentum that's occurring here. And at the end of that, the penultimate move of that, we've got a head and shoulders pattern with a gap. And I don't know, somebody will get their technical analysis book out and critique me. I forget if that's the technical definition of an island reversal or not. I know that is right there. We gapped up, we had the single candlestick, we gapped back down. And all of that happened at the neckline of our head and shoulders pattern in the dominant direction of the bearish trend. There's just a lot of pieces of the bearish puzzle that are coming together. And if it comes out that the interest rate's going up 100 basis points, which there's, I think, an 85% speculation baked into the market right now. That was the big crash on Tuesday. 85% chance that the Fed's going to raise the rate by 100 basis points, even after they came right out and said, oh, we're not going to raise it. It's not going to be that bad. I think you should take what the Fed says and just believe the opposite. Like, inflation's transitory. Like, nope, it's here a while. We're not going to raise rates more than 50 basis points again. Boom, double, 100 basis points. We'll see 7,500. Don't be surprised if that happens.
Aren't you glad you sold your home?
Oh my gosh, yeah.
Can you
Dude,
imagine?
I know it's not it's not a real estate show, but I geek out on real estate. I love it. And I've been seeing some interesting stats that are coming out about real estate. It's not looking great.
No.
Nobody really that I trust has said like real estate crash. but I don't think you should expect your house to go up 10% a year like it has been if you live in Nashville, and it may actually decline a little bit, but I'm getting off track there. Well, one more thing to be off track. On a positive note, lumber futures have plummeted. So if you're wanting to build a house, then you're sitting pretty. So yeah, the Lord's favor was on all of those decisions in the last year for sure. What else was I going to show you guys? Oh yeah. So the head and shoulders pattern, and then this island reversal, it was nearly unmistakable right there. Just so crystal clear. You could drive a Mack truck through that gap right there as the market's coming on down. Now this support has my attention, and we could bounce back and forth a little bit. We'll see what happens there. And the other thing that has my attention, we've got to keep all things equal. Coming back to stochastic here, I'm just going to drop my cursor on where the current stochastic lies. If I can do that and let go. The mouse is too sensitive. If you look left a little bit, we're kind of getting down to the point where stochastic tends to pop back up a little bit. And the reason stochastic pops back up a little bit is because price action pops back up a little bit. So, I don't see this maybe as a great time to enter a bunch of trades, but right after we get done with the show here, I'm probably going to close down at least a portion of my positions as we're sitting here. I mean, we're at support. Alfonso says this all the time. I'm a little jealous. I wish I had thought it up, but he says, when the market, gives you money, take it. Put the cash in your jeans and call it a day and enjoy a long weekend. So that's kind of where I'm at. Now, for those of you that missed Power Trader and did not get into all of these beautiful trades, let me help you. I know we don't share a lot of specific trades on here. I need a disclaimer. I don't have a disclaimer. Hold on. Do I have a disclaimer slide?
You got one somewhere. I know you do.
Hold on. This is probably wise to.
Yeah.
Let's just do this. Okay. There you go. Don't be stupid. The training's for educational purposes only. All examples and analysis are intended for these purposes should be considered specific investment or training advice. Scott and I have done this for a long time. And I don't think you should expect to watch a free YouTube show and think that you're going to make millions. There's a little bit of education and muscle that has been built here. Are we communicating? So anyway, just looking through, these were all my bearish lists. These are trades that I have actively open right now. Two shorts, BAX is a short and NVO is a short. And then SH is a long trade because that's an inverse ETF on the S&P 500. So obviously we've talked about the S&P ad nauseum, so we don't need to review SH, but BAX still looks pretty decent to me for an entry. And what my qualifications were as I was looking for these bearish trades, that's a curse word for Scott, but I'll say it anyway. For these not bullish trades in Power Trader, I was looking for stocks that were making lower highs, but you remember that like mega bounce that we had in July going into August? I was looking for stocks that kind of rejected that continued their march on downward. And look at these candlesticks that are popping up here right at a beautiful part in this trend. We could draw some trend lines on here just to add clarity. I'm not going to nitpick these. I'm sure you all could draw a much better trend line given a little bit more time. Why won't my line double here? Command C, Command V. There we go. But if you think of those as zone ranges, we're basically right at resistance here with a lot of downside potential towards support. This green line through there is where I entered the trade. So I can just remind myself. So I'm a little bit underwater on this one. Not bad. I'm just about break even right now, actually. So, BAX, Baxter International, that might be a ticker that you want to check out. NVO, this is one that we talked about in Power Trader. Look at that beautiful island reversal. That green line is where I got in. Boom. I mean, this is one where you might just want to put some cash in your jeans, like straight to support. Hello. Thank you, stock market. We'll be back to play again another day. So that's those two. Now, these are ones that I did not enter, but they were on my list. Why I labeled these blue, I don't know. For the life of me, I don't know. But anyway, we had blue and red stocks. The red ones were bullish and the blue were bearish. I didn't place any bullish trades. Thank the Lord. They were all bearish trades for me this week. So ABBV, let's take a look at this. Interesting, a strong bullish candle and an otherwise bearish headwindy kind of day. Not sure I would trust that, but at the same time, you're trading right into price resistance right there. So could be interesting. I think there's better trades out there. CTSH. Here's another one. You're halfway between support resistance. So we were looking at this on Sunday right there. That's the candlestick we were looking at. So you missed half this move, but you kind of have the back half of the move with a nice big long upper wick on today's candle. So far, we got 3.5 more hours to go until close. So everything can change. Puke was a puke. I tried to short this and there were not enough shares available for shorting.
Oh,
Puke.
wow.
I assume that's why my order got rejected. So I don't know why else it would have been rejected. But nice bearish trend on, I call it Puke. It's Prudential Public Limited Company. Very gappy, kind of a unusual stock. Is this the insurance company, Scott?
Yes,
I didn't
it
know.
is. Yeah, it is. It is.
So I don't know why it looks different. Not that difference bad, but you know, it just
Okay.
looks,
I got to ask you a question. So when you can't get shares to short, do you go get options instead? Do you ever do that? Or because you can't get shares to short, you won't touch the options? There's a couple of
Great
schools of thought
question.
is where I'm asking your thought with this and how you approach it usually.
I don't know that I have a comment on the schools of thought because I don't know what they are, but I did look at the options on this and the bid-ask spread was so ridiculous that it just wasn't a viable option purchase for me.
So I want to dovetail real quick before you move on with this. There are a couple of schools of thought that if you can't get the shares to short, what do? You go get the options, right? But there's a school of thought that goes with the fact that you can't get the shares is probably a reason why you should not purchase the options because the potential for a squeeze or whatever down the road. I don't have a strong opinion one way or the other with this. I've done it, in the past, and I don't have a problem with it, but it is something to put in the back of your heads out there, guys, just to think about. So anyway, keep going. Sorry. I just had to throw that in.
Yeah. Hey, I just had a thought. My friend Buzz, it's on YouTube. Are you the Buzz that was either the pilot or you did something with McDonnell Douglas? Am I connecting all those dots? Because if so, I don't think I've seen you in quite a while, but I just remember that because you have the coolest name in the world. It'll take him like 30 seconds to hear that because of the delay on YouTube, but I'll look forward to his response. So anyway, I did not trade Prudential bearish because for whatever reason, the order was rejected and I didn't feel like screwing around with it. I did look at the options. The bid-ask spread was redonkulous. So just no go for me. And then DXC is another, you like that?
I've not heard that's like in Son of Bonacci for you. You just come up the most. Sorry, keep going.
Oh, I've got more. I wanted to call this the Honky Stonks show, and Chris Burgess forbid me because we're in Nashville and we have honky tonks in Nashville. He's like, Josh, everybody's gonna think you're a weirdo, which whatever. Like, okay. The honky tonks or honky stonks. That's what I wanted to call it. Anyway, DXC technology. Here's another one that's just been in a predominantly bearish move and a long upper shadow on today's candle may be one that you want to entertain. I in full disclosure will not take any more trades this week. I have learned, this could be an interesting thing to talk about, but I have learned there's a rhythm to my trading. And inevitably, if I get a bunch of really great trades in a row, and then I keep pushing that luck, I don't know if it's like a recency bias or what it is, but I could almost bet like whatever trade I took next, it wouldn't be profitable. Like I need a reset, a weekend, a couple days, of something. And it's like, just to step away from it. I don't have any bias. I'm explaining this answer to myself as I'm talking because I have all these trades that are out there bearish. Therefore, I must be bearish. And that doesn't mean the market's going to continue being bearish. I just have a recency bias. So I won't take these. I mean, Scott's here to play. I'm Scott's wingman. He's lead. Scott's lead. I'm wingman, but he'll cut me off if I'm saying ridiculous stuff.
But it is the hot hand theory. You're not wrong. And this happens to a lot of people. I mean, and I'm saying this to credit Josh, but if you're listening, you're newer to trading, the fact that you won the last 10 trades out of your 100 that you're going through the next series of doesn't mean you'll win number 11. You don't know what the outcome's going to be. You know your batting average. And Josh is well aware enough that he knows what he needs to do. And if he doesn't, Josh, I'm asking, but I'm implying this right now. If you don't, do you typically have losing trades after that if you don't recalibrate yourself?
Yeah, that's what I just said. If I don't step away from it for a minute and that's a great word, recalibrate, then my batting percentage goes down exponentially.
Yep. Needlessly.
And needlessly, yeah.
Yeah.
And just enjoy it. So, all right, can we get philosophical for a second? I'll stop sharing my screen and we can just look each other in the eyes. I've been thinking about something recently. There's a book out there called The Gap and the Gain. And I love it. Has nothing to do with the stock market, but I love its title because it seems like it could have something to do with the stock market. And so here's the premise of The Gap and the Gain. Everybody go buy the book, put it on Audible. It's a great one to listen while you drive around. I'm going to assume that a lot of you that are in here doing stock trading are relatively driven people. Like, you decided that the world wasn't going to tell you what you're worth, and you're finding vehicles to go and put some extra cash in your jeans. People that are just comfortable cashing paychecks and just living the Latin life that their boss tells them, they don't usually come and do stuff like become a stock trader. So with that as kind of a presupposition, there's a possibility that you could be measuring yourself against the gap, which is a theoretical, idealistic horizon that's out there of what you want to become. Like, I posted on the Discord channel on Tuesday, a personal friend of mine sent me a text message in the morning. He made 6 figures that morning, 6 figures. And it was not that huge of an account. I mean, it's not a small account either, but it was not that huge of an account. But, and so some of us that may have seen that text, heck, myself included, I've never had a 6-figure day, like one day from last night's close to this morning at 10 a.m., and that may be the gap for us. Like, wow, someday I want to get there where I can have a 6-figure day. But the deal is that idealistic outcome is like a horizon. It can be stabilizing. It can give us something to run after, but it also may never be achieved, because the closer we get to the horizon, the further the horizon gets from us. And as achievers, we keep moving the goalpost and putting it out there further and further. That's what happens when you measure yourself against the gap, where I am versus this idealistic where I want to be. And it can be a discouraging place to live in versus the gain, which is where you turn around. I'm all wired up here, so I can't do it. But you look behind yourself and you say, look how far I've come. Look what I've accomplished. And it's a completely different emotional place to be living. And as it relates to what we were just talking about, there could be an opportunity for me to say, look at what's yet to be. I could go place all these trades on my watch list. I invested the time into finding those stocks and analyzing those stocks. And here's the gap. Like, I made 6R, but by golly, I could have 10R by the end of the week. That's measuring myself against the gap. Where I think right now, September 15th, 11:30 Central Time, there's an opportunity to measure myself against the gain and look behind me for a second and say, look how much you've accomplished this week already. Let's just take a little break. In ancient literature, they call it Selah. Let's just take a break and consider what we've already done and then move forward with a new perspective. I hope that encourages somebody here. It's been on my mind. I'm reading this book, and I think it synchronizes perfectly, Scott, with what you and I were just talking about.
I know you and I both like Tony Robbins, and there is, in one of his audios, I'll remember, and maybe it's an interview he did, there's a talk about where he's meeting with some billionaire that he's consulting with at this point. And the gentleman shows him like the wine. So they're going through the house, just chit-chatting or whatever. And Tony's doing quite well, but he's like, I got up my game. Like, it was like, and again, you can call that a monetary goal, whatever it is, but he looked at, it's like, I'm at this level and I thought I'm here. And I look at this and I'm going, I could be so much more. I could do so much more. And I don't think it was a financial commentary in the context, but it's been a while since I've heard this, but you made me think about it in this context. And a lot of times, are you the big fish in the little pond? And they put you in the ocean and you're like this, blah, blah. And I don't mean that in any negativity, guys. You are, what is it, your closest, 5 people around your circle, inner circle sometimes. And I've got a friend of mine, their coach, this is a soccer team, makes them play. It's like a completely different level above. Like, they will never win a game kind of stuff. And a friend of mine said, that's just horrible. And I said, not so much. Everybody's got 40% more in them than what they think. When you're working out, most of you have 40. This, the data proves this. It's not, in my opinion, like the statistical research and scientific research behind it.
Yeah, there's a book called My Life with a Navy SEAL, or Living with a Navy SEAL, by, it's the Brohammer who married the Spanx gal. I can't remember his name, but yeah, that principle's in there.
So, I was wondering who that is. Anyway, you have more in you than most people recognize and realize. And don't sell yourself short. Truly don't. Like, we deal with psychology when I do the traction classes. And for some people, that is, I think, one of the reasons they're there. But this can be a very brutal game, because this is not a game like being an accountant where you can do the numbers and get it right. There is emotion in the market, and it represents in different ways. And then, of course, there's some manipulation that goes on as well. And so I try to remind people, the fact that you have a losing day or a bad trade does not make you a bad person or a horrible trader. The best in the world have losing trades. Warren Buffett has made it clear as losing trades, and he's the oracle, right? Nobody wins everything. And I would not, Josh heard me say this and I give him a hard time, but I'm not interested if you win 100% of your trades. I'm interested, are you an asset manager? You're a risk manager first, and manage your risk. You see Josh do it all the time with the way he lays out his trades. He shows you the risk. He shows you the R rewards that are there. And he's doing exactly what he's been telling you all he's doing. But I know we're kind of over the map with this, guys, but there's some pretty, sage ideas and thought behind this and trying to help some of you get to the next level. And I know some of you probably won't look at just charts and then that's it. But I tell in traction, guys, I can show you 130 different ways to tactically go after the markets. But if your psychology is not wired in there, the market is going to play the games with you. And for the 20 years I've been working people publicly or privately, whatever, I always say, if you're not balanced mentally, physically, spiritually, and emotionally, the market somehow is going to find that weak link in your chain, and it's going to expose it. And I've seen enough of people over the years tell me you're right. I always say, if you're sick, don't trade. If you're going through some personal trauma in your life, don't trade, because more than likely you'll have some of your worst trading at that point. So this goes back to Josh's original commentary here. There's a point where you take a step back and walk away from it. Go exercise, go do something, go to the movies, whatever. Get away from it. It'll be there when you come back. The markets are not going away. So, did you find the name?
Yeah, it's Jesse Itzler is the guy. He's a very cool dude, as is his wife. She founded Spanx, the women's underwear line, I guess.
Yep.
And anyway, it's called Living with a SEAL, 31 Days. Here, I'll put it on the screen here. I put it in YouTube as well. Stand by, sharing screen.
Jocko Williams, not Jocko. What was the? No, it's not Jocko. It's I cannot think.
Not sure where you're going with that.
No, it was the person at the SEAL. That anytime I would know his name at the top of my head.
Oh, yeah, I'm not sure. I'm not sure who the SEAL was. He probably names him in the book. But anyway, yeah, he talks about, like, day one with the SEAL, they go out, they're doing pull-ups, and Jesse does 10 or whatever, but he has to do 100. I'm making up the numbers, just read the book. But he got to 10, and the SEAL was like, no, you're not done. And it was exactly what we talked about. It's this mental game. Your body has a self-protection mechanism in it that it thinks it's done, but you really have another, whatever the percentage is, 20, 30, 40% left in the tank that you can go. It's just reserving that. And so, truly extraordinary humans, whether it's physical, emotional, whatever it is, they figure out how to tap into that last bit, which is what makes Navy SEALs seem superhuman. Mm-hmm. So
very much. I know we had I had a question on trying to trade left or trade over itself. I'm going to show that really quick just to help everybody see this, because this is what I harp on a lot. And I didn't mean to harp on this. I'll back.
Put the other book in YouTube too, The Gap and the Gain. That's a good one to listen to.
I'm going to clear this chart out, and I'll make this pretty quick. All right. So this goes back to, I think, David's question a few minutes ago about trading over itself or something like that, trading left. And I harp on slope really hard and continue to prove out why. So the more vertical, and we're going to just doing a very quick version of this. I hammer this a lot deeper and other things I deal with the classes, but this slope right here is not sustainable. Well, you don't know that. No, I do actually. The reason I can sit here and say that is because what's going to happen eventually is you're going to take that slope, and what's going to happen is you're going to try to trade back into something going in this direction, right? Well, if this were to continue to drop at that rate, you're now trading into a prior channel. You're trying to trade back into a prior angle. Stocks do not continue to go down at 90 degrees. Well, why is that, Scott? Well, have you ever seen any single price bar in history go back to the left? No, because price only go up, down, and to the right. Why? Well, because time moves forward. It doesn't go backwards. We can use the past to help us in the future. But when you're looking at this, so once you recognize that, this price dropping at that rate of descent is not sustainable. This goes back to my whole point, which is when this move down is coming to here and people are trying to get long and you're daggering, you're going to pop out, you retest. Well, if you're long here, you understand people got stopped out because you violated that low. This slope coming up counter trend to this move right here is so steep that it's not sustainable both down, and the ensuing bounce, the dead cat bounce, is also not going to be something that does this statistically. Are there cases where we can find that? Absolutely 100%. But if you're building a business model to trade around, you do not want to bank on this, because then you become the one-hit wonder, and a lot of people blow up trying to do that. The statistical bias is going to prove to you that you're going to have a little counter trend bounce, whatever you're going to get from it, you'll pull back. You may or may not violate this low, but just like this move right here, coming right back down, folding itself is not sustainable. Just like the current environment, this current move here with this right over here at this rate of descent is not sustainable. So when it's not sustainable, they have to walk it over. So this stuff we get into deep in traction, but as a rule of thumb, you want to pay attention to it. If you understand anything about Gann, you understand that price and time have to equalize. Most traders are looking at the P&L, or you're looking at your P&L in real time, or you're looking at the right-hand edge of your screen. I beg people to take them off. I beg all of you to try this exercise for 30 days. And if for some of you, you're going to feel like I'm putting your arm behind your back, take off the right-hand axis of your chart. Turn off price. Turn it off for 30 days. And watch how uncomfortable it is for you to trade. Take off the P&L off the screen. If you're actually trading your chart and you're not trading your P&L, this should not be a problem for you. I understand you got to price your stock, but once you've done that, you have no business looking anymore, unless you're looking for a big round number or something like that. But you could drop lines in your chart and find those levels. But most retail, a lot of pros I know, are so fixated on the right-hand chart that they forget there's a axis called time. And it works against them all too often. I've been through there in my career. I've been in this for 40 years. So I was a kid. I have had that much exposure to this. I beg you, try it for 30 days. Let us know how that works for you. You may hate me for it, because initially it's very uncomfortable to do it. It's really uncomfortable. There's a certain fidget spinner kind of, I gotta touch, I gotta be in control. You're not in control other than your decisions. And if you're framing it just like Josh shows y'all, if you've already framed it, Tiger Woods hits the ball, Babe Ruth hits the ball, they do not jump up in the air and go grab the ball and put it, out of the stands or in the hole. If you framed it and you trade it, you need to learn the art of detachment. And that's really hard for a lot of people to do. Very difficult. There's that.
I want to show you something, Scott. I'm going to surprise you with this, so you may not have an opinion on it, but kind of in line with what Scott was talking about, where price is erroneous. I talked about this in Power Trader as well. So we're looking at the chart. This is the S&P 500. Can we all agree that we're in a downtrend here? I'll put a moving average. Is there any question in your mind, Scott, that looks like a downtrend?
Not for the daily. There's not.
Yep. I'll show you guys something. All I'm going to do up here is change the currency. So we're sitting here as Americans, red, white, and blue, looking at this chart, and we're saying we're in a downtrend. What if you're sitting over in Europe and change this currency to euros? Check that out. It's the same exact chart. What's the direction of the trend there? We're going sideways. We've just hit resistance 3 times. We're coming back down. The Europeans and the differences in the foreign currency exchange between the euro and the dollar, it's a completely different perspective here, isn't it? Mm-hmm. And so to some extent, price doesn't matter. I would trade this chart. I mean, to some extent, we get to the same outcome. Like we're bearish, and maybe we're coming into a support that's down here if you're looking at it from the perspective of the euro. But that chart and this chart, it's all the S&P 500. One is if your currency is the euro, and one is if your currency is the dollar. It's interesting. Do you have any thoughts on that and how that can benefit us? I've never done that before this week, but I got kind of fascinated with that study, Scott, and I don't know what it means, but I think it's very interesting.
Are you thinking from an intermarket relationship standpoint, the benefit of that is what you're coming from, Josh? Is that what you're?
I'm looking at it from the perspective of finding momentum. Like if Europeans started shorting the US market because they thought we were at a multi-month resistance level, where here we're just looking like, oh, we're in the middle of a downtrend. Mm-hmm. You don't have to have an opinion on it. I just thought there's a analyst that I really, really respect and pay a stupid amount of money to, and they were looking at that, and I thought, I'll be darned. I've never considered that.
Maybe the way I come at this, and I guess this is one of these I talk about, I think you know this by now with me, like John Murphy was a huge influence on me, and his books on intermarket relationships. That's the first thing I think about when you show me that, is I'm going to look at those relationships as to who's leading, who's lagging, and what's driving that. And that's where I get into more macro focused analysis with that, because there is that, if you think about like that push and pull, like a seesaw or a stair climber or pistons going up and down, there is that relationship you're going to have between the currencies and the respective markets to those. There's opportunity around it. Absolutely.
Yeah. It's just interesting. But in TradingView, you guys can do your own study. You just click up here on the top of the price graph, which Scott just told you to delete. So if you can find it still, you can switch that to the euro and give yourself a little different perspective, as if you were a European looking in on the US stock market.
Can you pull up gold GLD or one of the whatever,
from the perspective of the euro or from the dollar?
Just from the dollar. I'm curious both, if you can do both really quick.
That's GLD. Is that?
Yeah, that's good. No, that's good. Yeah, that's good.
It's cratering today. Mm-hmm. Here's perspective of the euro. It's interesting. Mm-hmm. Also, fun fact, the euro dollar just crossed parity, I think, for the first time in a long time.
Yeah.
So we're sitting just right at parity today. In fact, it's exactly even today. Mm-hmm. But look at where it's been. How far has it been? Wow.
Yeah, that's been a brutal. Yeah.
Look at that. So the last time we were at parity
20 years
was 2003, 20 years ago.
Yeah.
Look at that. Which that opens up a whole new conversation. Maybe it's the subject of next week, but I mean, I love my dad with all my heart. He's one of my best friends, but he keeps telling me, he's so mad that the value of the dollar is being destroyed. And I'm like, Dad, here's the dollar. Like, US dollar has actually been very strong. Now, you can't buy as many eggs as you could a year ago because they've like quadrupled in value, but it's not the value of the dollar issue. Just to riff on inflation for a second, Scott and I preach this, brother. Like we could have had a church of inflation. We were preaching so much.
Yeah.
That it's not the value of the dollar. It's a supply chain issue. And I mean, I don't think it's fixed yet. So I don't see it getting better. These people that think inflation is just going to come down magically. I mean, let's pull out another 100 basis point hammer and just beat everybody over the head with it again.
They're taking that whole Volcker approach in the late 70s, early 80s. I mean, that's what they keep. It's
well, in fairness, it kind of worked.
Yeah. Oh, it did. It definitely did. It's just, and it's not popular because of what it's doing to the value of everything. But the other piece of this is, do they push too far? We've seen that before. But the other thing I'll say at this, the frustrating part is, how bad they've missed it to get it to this point where they should have a couple years ago, at minimum, at least started. And then I have to wonder why things sometimes get
Yeah.
twirly too, but I won't go there right now.
I mean, I love to riff on hate the Fed. Like we could have some really good YouTube shorts on that, but I actually don't think it's their fault. I think they're doing a pretty good job. I think it's the politicians, period. I think it's the politicians. And I don't care which party you're in, you know, it can go all the way back, but you know, handing out free money and not solving the supply chain issue. Like why we don't just bring back and recover the manufacturing in the United States where we're not reliant on one other country to supply everything. I challenge you, go to Walmart and try to find a flashlight that's made in America. I was looking for a flashlight the other day and I'm kind of on this made in America kick and couldn't do it. There's not a single.
Do you know how hard it is to find an American flag that's made in America? Do you know that? Have you looked for that? I'm not kidding you. Go look. Go look and find.
I wish you hadn't told me that.
No, I'm going to tell you right now. Go look. You'll be made in China. I'll just leave that. I'm just telling you.
We just our YouTube feed just went down. You can't say that, Scott. Come on, it's 2022.
Yeah, I did. I'm not politically correct. If he doesn't know that about me, I'm not. But guys, I will say this along in this general context. I know we're getting out of time here a little bit. I will mention, like we go in election cycle, I don't care about anybody's politics on this, including my own. I am telling you, Wall Street's going to care about it until, if we get gridlock, they will be, at least in theory, they should be happy.
Yeah.
You're like, well, that doesn't matter to me. It does matter because it's driving where your stocks are going, whether you day trade or you invest. It's going to drive the behavior. We're going to wrap up, September, October, two of our more poor performing months coming up. Then we go in the most bullish 6 months of the year, starting in November. And that ends what? At the end of April, start in May. Selling may go away. There are other cycles going. You've seen the counter ranges. We're sitting on top of those. Maybe they fail. Maybe they don't. But we'll see what the Fed does. And it may be more than what the Fed does, because they're already telegraphing, saying, giant billboard, here's what's coming, right? You can see it on your phone. Everywhere you go, you hear it in the media all the time. It's what they either don't say or what they do say that's next, and expectations, I think, is what's going to drive the market after that, because they know they're trying to tamp down the inflation. If you think it doesn't matter, go back and look at that CPI number. Look at, but you go back 10 years ago, does CPI really matter that much to somebody? These things become relevancy at different times, depending on what's going. Wall Street will pick. The reason I bring this up is because a lot of people think, if I just know this one thing as a day trader or as an investor, I'll always make money, until the dynamics of the market shift. So what we try to teach through TSU, the class we offer, is to make sure you are not a one-trick pony. Why? Because a lot of people are not used to high inflation. I'm a 70s baby, so to speak, right? That's, I was born in 69. So I remember 21% inflation as a kid. My dad and I had conversations when I was a kid about this, and it still to this day sticks in the back of my mind. The long-term rate on your 30-year mortgage should get back to 8.5. Anybody that's known me the past 20 years has heard me discuss this in the market standpoint. So my first mortgage was 8.75. So I've watched it go from there all the way down to what we're paying, 2s or 3s, and then we are now. So these things ebb and flow. Don't let the market scare you, and you can't change it. So manage your expectations around it, what you do. And that's true with any trade. I don't care if you take a trade and you lose a trade. I care, did you stop out? And if you got your R's, did you take your profits? Did you follow your rules? Because that's what makes you a long-term survivor in the market and a market timer, if you want to call yourself a market timer. So there's my PSA, I guess.
That's good. That's really good. I think I'm going to leave it there, because if I put up a new direction, we're going to be beyond 3 minutes. And candidly, I want to close out this NVO trade and record a little Loom video for my high school students, because it's a short trade. So I want to show them how they can close that trade by buying to close. That's always, mind bending the first time you see that happen. So I want to get that done. But Scott, brother, man, I just so appreciate your commitment and faithfulness to the YouTube show. I really enjoyed trading together, you and I, and the fun we toss back and forth. And,
appreciate you.
it's all in good cheer. So
Thank you for
I'll,
being here.
yeah, I appreciate it. I'll let you have the final word.
I'm out of here. Y'all have a great weekend ahead. Remember, tomorrow's a quad witch. Be careful with that, and then things will settle out next week. We'll use the Fed, and we'll see y'all guys and girls next week. Bye.
See you guys.